The Bitcoin blockchain has seen unusually large activity, yet the price is going down. I'm Rosemary Miller here with Stephen Ehrlich, the Director of Digital Assets Research here at Forbes. Thank you so much for joining me, Steve.
Thanks, Rosemary.
So, Steve, what's going on here? Why is there unusually large activity and the price is going down?
So we've seen a lot of activity, or an unusual amount of activity, on Bitcoin's blockchain in the last few months, because for the first time ever, NFTs have become available on top of Bitcoin. This was not in the roadmap that was issued by Satoshi 15 years ago, but Bitcoin's code base, like that of all the other blockchains, is open source, which basically means that it's free for anybody to see, download, and tinker with. And the real innovation here was not necessarily putting the NFTs onto the Bitcoin blockchain. For anyone that's taken the time to look at how the Bitcoin blockchain is actually, how it actually is presented, if you wanted to see it on a computer screen, there's a lot of transactions, but there's always a bit of space within the blocks for discretionary data, which could be a JPEG, it could be a love note, it could be a marriage certificate, whatever you want it to be. But there was no way to really prove that those images were particularly unique, which is something necessary for NFTs, which are, by their very definition, non-fungible to have their value. Well, around February, a developer devised a way to bring what's known as ordinal theory onto Bitcoin in Satoshis. And ordinal theory it's a high-level mathematical concept that's kind of beyond the purview of what we're talking about here. But basically what it means is that you can sort of inscribe Satoshis, which is the smallest denominator of a Bitcoin. For instance, the US dollar, if prices will go out to 0.01 cents, a Satoshi is 0.00000001 Bitcoins, or 8 decimal points. And normally those are fungible. You don't care which one you get or which one you send. But with ordinal theory, certain Satoshis are now marked so that they are unique, and those can be associated with NFTs. And because crypto loves a good tool to speculate, you put both these things together, and all of a sudden you get an NFT, a splurge in NFT activity on top of Bitcoin.
So, why do we care about NFTs in 2023? I feel like NFTs were really early 2022. The gold rush felt like 2021. Like, why is it just now happening on Bitcoin's blockchain?
Mhm. So NFTs definitely did surge in 2021, and started to peter out in 2022, along with the rest of the crypto market. But they do have a strong base of support, and there is a lot of belief that NFTs are going to create, are going to be the bedrock of a whole new immersive internet, and a way of generating and digesting content. They always seem to be a bit uh, like incongruent with Bitcoin, though, because remember, Bitcoin is the first blockchain out there. Uh, its use cases are rather limited, and it's pretty rigid in its structure. For instance, it's really only good at sending Bitcoins back and forth, which was by design. Ethereum, on the other hand, and some of the other layer one blockchains, uh, are seen as like multi-purpose, multi-computational platforms that theoretically could operate any type of decentralized application, from a cloud storage facility to a social networking, a social network platform. And the key to all that are smart contracts, these sort of like auto executable computer programs that really work as kind of if then statements, but on steroids. Bitcoin didn't really have that. So it never really made a lot of sense to put NFTs on top of Bitcoin, because what were you really going to do with them? You could send them back and forth, you could prove you own one, but there's very limited utility without these smart contracts, and they still don't exist here. In fact, a lot of the nodes have to kind of jerry rig certain code in order to be able to process these NFTs. So the utility is really hard to find, at least right now. But again, it's early days. Theoretically, that could change. But I think another reason also, Rosemary, going to your question as to why we've seen this explosion, is there's any time that there's some new idea, some new development, there's certain folk that are going to try to get in early, gobble up the assets, maybe corner the market, and then either use them as like prestige ownership items, or perhaps sell them. And right now, although BRC20 tokens, NFTs on Bitcoin have really led to a surge in interest, in the grand scheme of things, it's still relatively small. So we're still early, and a lot of this is really just due to speculative fervor.
So you don't think it's a wise investment, is what you're saying?
No, it's I would definitely say it's not a wise investment right now in my very official non-financial advice voice here. Anybody that's really looking to purchase some of these tokens and NFTs on Bitcoin, just keep in mind that they are extremely speculative. They have little intrinsic value, little utility right now, and you'd really be buying them just to be part of a movement, be part of the excitement, and hope that somewhere down the line additional utility is going to be built on top of it. So I mean, I'll never tell someone not to buy something, but definitely understand that this is at the very far end of the speculative spectrum when it comes to digital assets.
And I believe I saw in your reporting that the transaction fees have actually been higher than what the block is
Mhm.
worth, right?
Right. So there's two ways that miners get compensated in the Bitcoin network. For one, they get what's known as a block reward. In Bitcoin, a block is added to the network approximately every 10 minutes, plus or minus a few seconds. And the block reward is essentially a set of brand new, freshly minted Bitcoins that goes to whichever miner gets the reward. When Bitcoin first launched, it was 50. It reduces by half every 4 years. So it went from 50 to 25 to 12 and a half, now it's 6.25. Next year, it's going to become 3.75. And at 6.25, at somewhere at like 18.5, $19,000, that's about $144,000 windfall for a Bitcoin miner. Uh, Typically, transaction fees, but that's not the only way that a miner gets compensated. They also get what's known as transaction fees, or more colloquially, tips, where somebody will send a transaction into the network, and then if they want a priority status to make sure that their transaction gets put through, they might add a little bit more, a little bit less. A lot of this happens automatically through wallets and exchanges, but during times of high use and congestion on the network, transaction fees can spike up from what's usually a dollar or two to, in this case, up to $30 per transaction, which is extremely high. And for the first time in years, the amount of transaction fees earned by a miner for finding a block was higher than the block reward. So that just kind of shows the peak demand. That's come down a little bit since then, but transaction fees are still higher than they have historically been for this over this period of time. And there is kind of hope and expectation that uh, maybe transaction fees will remain a little bit heightened, which could help smooth out minor revenues and also assuage some fears that people have that as the block reward continues to reduce, miners may have less interest in mining the blockchain because theoretically it could become less valuable. So if there are investors that are interested in maybe getting some indirect exposure to all of this, it may be worth looking into publicly traded Bitcoin miners that would just benefit from the increased activity, but not necessarily have exposure to the underlying NFTs.
Hmm. So I guess kind of going back to this 2023 thing, I'm just not understanding what the selling point is here. Okay, high transaction fees, NFTs with no utility at all. Maybe they can be collectibles one day, but we've seen NFTs that have utilities kind of plummet as they were trying to be collectibles. I guess what's the point? Sell me on this.
Well, I appreciate the question. I don't necessarily know it's my job to sell you on something like this, but more to just talk about what's happening and why I'm seeing this activity. It really just at this point I think comes down to speculation, and we don't know what we don't know. It's hard to know. It's hard to forecast exactly where these innovations are going to go. I do know that there are development teams building out software infrastructure to try to add more utility onto these networks, and for whatever it's worth, I mean, Bitcoin has always been and remains the most valuable blockchain network in the world. And I know that there's a lot of enthusiasts, aside from I think the most Puritan Bitcoin maximalists, that have always felt that there would be ways to add a more diverse set of use cases on top of Bitcoin than strictly sending Bitcoins back and forth. But again, it is very highly speculative.
So, speaking of new things that are happening in the crypto space, there is BRC20. Could you tell me a little bit about that?
Right, and I'm glad you brought that up, Rosemary, because sort of meme coins and BRC20 tokens are sort of being conflated with the NFTs and ordinal theory. So this is a common point of confusion. BRC20 is an acronym that basically stands for Bitcoin Request for Comment, and this is actually a play on an Ethereum token standard called Ethereum Request for Comment. Uh, it's a little technical, so I'll kind of walk through it relatively slowly. Uh, on blockchains have different types of tokens that run on top of them. Layer ones like Ethereum or Algorand or Solana or Near or plenty of the others or Avalanche. They have base layer tokens. Ethereum has Ether, Solana has Solana, so on and so forth. And those are the tokens that are really used to compensate nodes that process transactions and keep the network secure. Typically, they also have the largest market capitalizations. However, as decentralized applications started to be built on top of these networks, they decided to launch their own tokens. Those are called DApp tokens, decentralized application tokens, and they have to run on a separate set of rules from these base layer tokens. And at least in Ethereum, sort of like the way that of creating the standards for these new tokens is through a proposal process called Ethereum Request for Comment, so ERC. Now, the most common token standard in Ethereum is something called ERC20, which are used to create fungible DApp tokens, like a token used for decentralized cloud storage. And again, Rosemary, you and I would not care which one of those tokens we get, as long as we get one that's authentic. There's another token standard called ERC 721, which is used more to denote non-fungible tokens, so not fungible. And these other blockchains have their own trigraphs, their own acronyms to basically do the same thing. BRC20, I think, is really just sort of like a nod or maybe just a bit of a parody of the ERC20 meme, because it was used to create these BRC20 tokens on top of Bitcoin that are also seem to, although they're not useless because they do have certain market capitalizations, are meant to kind of just be fun experimental play money. And in fact, Domo, the pseudonymous developer who built all of this, said himself on Twitter that these tokens that are being minted should be worthless. But nevertheless, especially Bitcoin crowd, the crypto crowd loves a good tool to speculate. Meme coins are a fantastic tool to speculate, especially in crypto. I mean, we're seeing millions of these tokens being printed, and this has also led to further congestion on the Bitcoin blockchain, which has contributed to the rise in fees and growing miner revenue that we spoke about before.
So, what do you think the future holds for BRC20?
Again, the future, we're in the very, very early stages of this. It's hard to, there's a few different ways to answer that question. It's kind of interesting that you asked it, because actually the creation of BRC20 tokens in particular has led to a bit of a firestorm within the crypto community. Aside from just the raising of fees, some of the more like hardcore, again, like Puritan Bitcoin believers almost see this as tantamount to a spam attack or some sort of like affront to Bitcoin on the whole. And developers have gone so far as to encourage miners to filter out transactions that are used to mint and use meme coins, because miners can choose what transactions they put in their blocks or not. On the other hand, there is a strong contingent of people that don't necessarily even want to talk about, I guess, make like a judgment on like the morality or the viability of these tokens, but they just understand that it's a losing battle because Bitcoin is open source. It's free for people to build on top of, and it's hard to, I guess, put the toothpaste back into the bottle. Again, these meme coins for the most part are largely worthless, extremely speculative, but it's hard to know exactly what the future is going to foretell. Miners, developers are looking to build ways to make these tokens easier to handle, to transact, maybe find ways to build applications that give them more utility. We'll have to wait and see, but at least for now, especially because interest in these tokens is so high and there's so much speculative fervor, that it is an extremely risky investment for anybody looking to purchase any of these tokens right now.
So now we understand why there's unusually high activity on the Bitcoin
Mhm.
blockchain, but could you tell us why Bitcoin's price is falling?
Right, and this is a really salient point, Rosemary. Despite all this interest, the Bitcoin price is falling, and the two don't necessarily make sense. I mean, why? Activity high, price should be high, but that's not what's working here. There's a few factors at play. I mean, for one, Bitcoin has already had a pretty fantastic start to the year. Despite some of the recent climb down, it's still up about 67% year to date, and that's on the back of a 35% jump in January. And then I think it was a 22% jump in March when a lot of uh, traders and investors piled into Bitcoin as they were trying to find a way to protect themselves from all the banking collapses that we've spoken about before. I think at this point, the macro climate is starting to catch up a little bit to crypto. We're still at record high interest levels. Inflation is still the highest that it's been in decades. As we're talking right now, I think Congress is going to be speaking about or voting on a debt ceiling uh, package today, but that doesn't necessarily mean it's going to become law. And we are getting very close to Janet Yellen's X date of June 5th. And all of these things are sort of weighing on the price of Bitcoin. And I think what we're seeing is a bit of a reversion to the mean. But the other point too, and more specifically to BRC20 tokens and NFTs, I think the fact that we haven't seen a concurrent rise in Bitcoin indicates that many sophisticated, serious Bitcoin traders are not convinced that this is a major movement just yet. If we were, then that should be reflected in the price of Bitcoin. So the fact that the lines are going in sort of opposite directions is a good indicator of just how speculative this is.
Thank you so much, Steve.
Great. Thanks, Rosemary.